Okay, so hello everyone, and compliments of the season as it is the Christmas period. Today is actually the 27th of December, 2024. Now, we took a pound JPY trade some days ago, and as I promised, I just wanted to do a short recording of the strategy I used for that trade. Now, this is a strategy I have taught, the membership, the VIPs in the past. I can remember I did a 2 hour video in the past, sorry, not a 2 hour video, a 1 hour video in the past, with some of the members. And, I will be sharing that as well in the Telegram group after this one. This is just, a concise version, just to explain, this trade and to give you a quick way as to how to trade it. I mean, by the way, if you're not seeing me, I'm on the right hand side of the screen. But so let's get on with it. So this is the GJ trade. It's a strategy where you employ the Fibonacci tool. As you can see, I already have some moving averages on the screen. I have the red one, which is the 200. I have the blue one, which is the 50, and I have the yellow one, which is the 10. They are all simple moving averages, SMA. You know, uh, you can see here, these vertical lines divides or separates the chart into days. Let me just take it off by pressing Control Y. If I want it back on, I press Control Y again. Okay, so let's consider, what I was looking at for in this trade. Let's consider what I was looking at for in this trade. Um, this Fibonacci strategy is one you trade when there is a big move in the market or when the market is trending. Either a big move in the market, as you can see here, from here, you can see there was a big push all the way up. And of course, we see that the market retraced and it has now continued. So that is basically what I traded. I traded, the pullback continuation, or if you like, the continuation of the initial move. This is the initial move from here, which we call the impulse move. This is the correction or the pullback. And from here is the continuation. So you can see I currently have two positions in this trade. I have now on this particular account, this particular broker account, I've now closed, some positions, but I have left, two trades there. I've hedged it as a matter of fact, whereas in my other account, the trade is still open. So let's just do this. Let's zoom out so you can see it's an uptrend. Like I say, this strategy is used for trading uptrend if you want to continue in the direction of the trend, or even if it's just the beginning of the trend, or whenever there's a big move. So you can see I could have traded it from here. I could have taken it from here. When it pulled back, I continued, or taking it from here to here. When it pulled back, I continue. But no, I didn't catch it all, and I didn't catch any of this move. I caught it from when this big move happened. So let's focus on that big move. You know what? Let's just do this. Um, let's do this so you know exactly where the big move, the beginning of or the origin of the big move. Okay, so let's do that. So what you would do, you will go to the top right-hand corner, well, to the top left-hand corner there, depending on how you've arranged your tabs. You can see the F. Click on it. You can see, Fibonacci. Then you come to the lowest candle. I mean, this green candle and this red one are more or less like equal lows. So you could start it from anywhere really, but start from the recent one. You click on it, hold it down. I suppose you know how to use the Fibonacci tool. You click on it, hold it down, and drag it all the way to the very high. Then you let go of the mouse. You will have to practice it if you are not used to it. So the way to enter the Fibonacci, you click on it, or you go to Tools, Where is it now? Sorry, that's not it. You go to insert, you go to Fibonacci, and go to retracement. You can see there are various options for Fibonacci, but the retracement one is the one you need. You click on that and pick it up from there. Or if it's already arranged in there, you pick on it from here, the F. So you then go here to the very bottom. You left click on your mouse. You need your mouse for this. You left click on your mouse, hold on to it. I'm just going to do it again here. Let's just choose any arbitrary place. You click on it. You hold on to your mouse, hold it down, drag it, and let go wherever you want to let go. And that's it. If you want to delete it, you just double click on it. There, you can see it's highlighted. You click on delete on your keyboard and it's gone. But this is the one we've drawn. We picked it up from here, dragged it all the way. And you can see it pulled back to the 61.8%. So that was a 61% pullback. Now, since it started from here, if it had come back, if the price had dropped all the way back here, that would have been 100% pullback. But no, we didn't get the 100%. We got a 61.8% pullback. So you can see these are the different numbers or percentage pullbacks. If it only pulled back to here, I don't know if you can see it. Let's click on it and move this to the left. If it only dropped to here, that would have been a 38.2%. If it was to here, that would have been 23.6%. But it did come back. Let's push it back to the right. If it pulled back to here, you can see it pulled below the 61.8. It actually pulled below, but then it began to go up. That's when you want to enter the trade. Now, how do you add these numbers to it? Just in case you wanted to add to it. I suppose I'll do that, if I remember towards the end. Let's just get on with the strategy first. This is a complete strategy, guys. It's a complete strategy. A more comprehensive one, or a more comprehensive video I did, I will post or share in the Telegram group, like I said. Okay, so how do you want to trade this? As a matter of fact, we don't really need this moving average here, the 50. The one we really need is the 10 SMA. That's the one I work with. We don't need this one either, but fine, since it's on the chart, we just leave it there. So how do you trade it? When the price has come to the 68.2, 61.8, sorry, and it wants to start going back up, that's when you enter. And a good way to enter is when it goes above. Let's make this bigger. Oh, okay. A good time to enter is when it goes above the 10 SMA. So we could have entered the trade here. Or if you wanted, you could have entered here. Where will you place your stop loss? You would then place your stop loss anywhere at the bottom. Yeah, that's fine. Okay, let's pause this. Okay, so you basically would want to get in the trade once the price begins to go up. And one of the best ways to ascertain that is when the price now goes above the 10 SMA. So you could have entered here when it just closed above it. If you were not too sure, you could have decided, okay, fine, I want it to close above the 10 SMA decisively or convincingly. So you could have decided to enter here, place your stop loss, just below the last swing low. How do you know, or where do you know, how do you know where to place your stop loss? You could decide, okay, fine, I'll just measure, any of these candlesticks and go with the range. For instance, from here to here, that's about, that's about, okay, I mean, with this particular broker, you can see it says 40, but I think that's actually four. That's actually four. You could decide, okay, fine, let's take this one. This one is, about, okay, sorry guys, let's do this. Okay, sorry guys. I'm actually, even as I record this, I'm actually in some other trade which I'm monitoring, and I wanted to know when to get in and when to get out of some positions. But anyway, like I was saying, with this broker, the pip count or the range is kind of like different. So anyway, this is about 60. That's correct. That's about 60. This one is about 37. So I would say go with an average. Let's just make it 50. You could decide, okay, from here, I'll place my stop loss 50 pips away. Let's just say somewhere around there. Let's just say somewhere around there is where we would have our stop loss. Let's make that red. So we have our stop loss here. You entered here, from here to there, is a stop loss of 120 or thereabout. Guess what? We are going to be getting that. With this strategy, you can be sure of getting one-to-one. As a matter of fact, if you were to measure it now, this is where the price is so far. If we had gotten here, the stop loss was by 120. You can see so far we've gotten way more than that. We've gotten, at some point the price got here. We've gotten it has given us over 200 pips already. Although obviously you can see where it is. It is pulled back slightly and it's going to be going up. How do I know it's going to be going up? Because this strategy is proven. It does not work 100% of the time, but this is one of the strategies that works as good as 80% of the time if you trade it well. And by that I mean with regards to getting one-to-one. It usually delivers more than one-to-one, but when it comes to one-to-one, 80% of the time you will be getting one-to-one. Now, what are the areas we target? You know, um, we did talk of a pullback a while ago till this to the 61.8 and the 50, and guess what? We have numbers going up. So this is the point where it began to pull back. So this is a 0% mark. This is usually one of the areas we target. I don't want to say, I'm hesitating calling it your first take profit point or your TP1 because that could be huge. I mean, imagine if you entered here and you're targeting here, it means your TP1 will be 250. That would be pretty much an unwise thing to do, to have your TP1 at 250, even though you know it's going to get there eventually. You have to wait a number of days. After all, if we enter the trade here, it means we enter the trade on Friday, and today is now Friday, which is obviously a week. This is a strategy, if you depend on what time frame on which you entered, it could either be a day trade or a swing trade. In this particular example, it's a swing trade. I mean, by definition, really, a swing trade is a trade you're going to be in for some days. Some will say at least 3 days, others will say 5 days at least. But any which way, if you're going to define it by days or by pip count, it's a swing trade any which way you describe it. So you can see here, it's pushing up. It's been a trade I've been in for over a week. Well, I didn't enter it on Friday. I can't remember when I entered it now, but it's a swing trade. I knew it was going to be a swing trade. And like I did say, it's a trade where we're going to be expecting like 200 pips. Like I did say a while ago as well, we are expecting the price to get here, but we are believing it will go further because with this strategy, mind you, I'm saying with this strategy because it's a tried and tested strategy that I've traded for many years. You can see it does tend to go as far as the minus 27.2 and beyond. So I'm expecting to be in this trade for quite a while. Now, you might wonder, how do you add these numbers to it? Because from here going down, you can see the numbers or the percentages are positive numbers. But from here going up, they are negative numbers. Okay, I have not added more, but you can always add more. I'll quickly now show you how to add more numbers, either in the negative or in the positive. So with this now, perhaps you've heard me talk about the golden zone. You've heard me talk about the golden zone. Where do we call the golden zone? The golden zone is anywhere is between the 50 and the 61.8. So again, some of you who have traded this with me, you will know I usually would mark this place from the 50 to the 61.8. I would usually call it the golden zone, and I usually would leave it as blue. So when the price begins, when I see a big push like this, or when it is trending and the price begin to come into or begin to retrace, I'll be looking for it to get to the golden zone anywhere between the 50 and the 61.8. It doesn't always have to get to the 61.8. It could just stop here. If it's going to start going up, I jump in. And just to say, guys, the price would not always come to the golden zone, depending on how strong the trend is. The price could, come to just the 23.6 here, or it could drop to the 38.2. Or in this case, it did go into the golden zone. Now, guess what? On some occasions, it does actually even drop further. Now, the deeper it drops, that's the lower it drops, the more likely it is that, is that the more likely now, the less likely? The less likely it is that it will go back up. Even if it goes back up, it's just going to push up slightly and go down. So I'm going to add two more numbers to it, or percentages. So we have 61.8. How do we do that? You simply come here. Let me do this, guys. Let's move this. So you can see there's this red dotted line. You can always make it your own color, but this happens to be the color I've chosen, just to know, what you would find on the Fibonacci tool. So click on here, or click on here to highlight it like that. You can see that white dot. Right click on it, go to Fib or Fibo properties. This is how we are going to add the percentages to it. You can see the way it is laid out there. You go to Fibonacci levels, not this, not that, not that. Go to Fibonacci levels. These are the Fibonacci levels or percentages. You can see here for the 23 point, you have the level, you have the description. You can see here, the 23.6 is what we find here. Oh, okay, I've moved it. Let me move it slightly. Okay, let's do that again. Let's push it this way so we can see the numbers. Okay, we can see the numbers. You can see the numbers there. Okay, let's right click again to open it up. To open up the settings box, click on that. So this is the settings box. So you can see here, 23.6, there we have it. It's hidden behind the moving average there. Then we have the 38.2, which is here. Then we have the 50, which is here. So you can see the way they've numbered, they've described it, and you can see the levels. So what would you do if you want to add a new level to it? You simply click on this. You can see for the 50, it's basically moving the decimal point two places, 1, 2, and that is basically you have 0.5. Same goes for the 61.8, so on and so forth. So what do we want to do now? We want to add an additional one, which is 71.8, and add 88.8. Those are also numbers you have. So click on here. Click on there. You can see it creates a space for you. We want to add the 71. Okay, do we make it two? Let's make it one decimal point. We want to make it 71% retracement level. So here we want to have 0.71. 0. We want to have 0.710. And we're going to click on OK, and you'll see what will happen here. An additional number will be added. Click on it. You can see it has added an additional number. Okay, let's then do the one for the negative. This is the positive number it has added. Let's add a negative number to it. We currently have minus 27.2. That's a minus. What do we want now? Let me see what we want. Bear with me, guys. Let's just see. I mean, you would have to obviously check your own, do a Google search and check out Fibonacci numbers. I mean, there are some valid Fibonacci numbers. There are some which are default Fibonacci numbers, but there are Fibonacci numbers which people have experimented with in the past, and they found it to work and decided, okay, fine, they will go with that. So what we're going to do now is just to add a Fibonacci number to it, a negative Fibonacci number. Let's do this. I know this video is taking a bit longer than I had planned it to take, but I believe it's worth it. Okay, so the way you get the negative ones, just follow what's on here on the settings box so you don't get it wrong. You just copy it and play with it and you'll be okay. Okay, so you can see a negative number here. It's the minus 27.2, which is this. You know, that's the description. The level is minus 0.272. Again, you just move the decimal point. So let's do that. In this case, they moved it 1, 2. Let's go add. Let's go with minus 20. No, not minus 20 now. Let's go with minus 50. Minus 50. Let's go with minus 50. Don't forget the minus at this end as well. Minus 50. And let's click on OK. Let's click on OK. Okay, so you can see it has added minus 50 there. Like I did say, with this Fibonacci strategy, you know, when we enter a long position, this happens to be a buy trade, a long trade. The same thing applies to a short position if it's a sell. You know, you'll be targeting the minus numbers. In this case, like I said, I'm going to be targeting here, and I'm believing based on, you know, the overall movement anyway of the higher time frame, I believe it's going to go even higher. I believe it will get here. So this could be one of your take profit targets, and this is another take profit target. If it decides to go higher, if you're going to trail it, then obviously it might go to that as well. So let's just leave this one here and quickly see an example of a sell. I know we entered a pound USD trade some days ago as well, or I think it was maybe sometime last week. You know, so this would be an example. Again, let's just remove this so it's not too crowded. Let's just take off the 50. We don't really need that. You know, we only really need the 10 SMA for confluence. So how would you trade this one? Same way, as opposed to using your Fibonacci tool from the bottom to the top. If you are buying, you do the reverse. If you are selling, you will basically click on there, come to the highest point here. I mean, this is like the highest point. Click on there. I mean, even if you had done it from here, it will be pretty much the same because they are not so far apart. But let's just go with the highest point and come to the swing low. Let's come to the swing low. So you can see from the top to the swing low, it began to go up. Again, it got to the golden zone. You can see most of the time when there's a pullback, a deep enough pullback would be one that gets to the golden zone. That's the 50, between the 50 and the 61.8. Again, like I said, there are times when it goes as far as the 20, as the 71. We just added this. It might even go as far as the 88 before it comes back. Obviously, if the higher it goes, it means the more pips you will get in profit. So this one, it basically, we picked it up from the high to where it got to, so from the swing high to swing low, that's how you would trade it. That's how you would draw the Fibonacci. You would draw from the swing high to swing low, or from swing low to swing high. In that case, it will be from this swing low to the swing high. You know, how do you know when there's a swing? When it begins to go in the opposite direction. In this case, from the high, swing low. When it begins to go back up, because that's what you want. You want the swing, you want the pullback. You're going to start looking for entry once there's a pullback. So again, let's go select our Fibonacci tool. And this is the swing. You can see I'm able to move that. You need to practice this, guys. You can see to the swing low, because you will never know there's going to be a trade until there is a swing high to a swing low and a pullback, or a swing low to a swing high and a pullback. So in this case, a swing low from a swing high to a swing low, when the price pulls back, you know, okay, this might continue. So you don't even think of the trade until you see the pullback. So this is the swing high to swing low, the pullback, and you are now looking to jump in once the price closes below the 10 SMA. So in this case, you would have jumped in here. Oops, this is red, so this would be the stop loss. You would have jumped in here. Let's make this yellow dotted lines, which is for my entry, like you guys know. So you would have jumped in immediately, closed below here, below the 10 SMA. Place your stop loss at the top there. Place it, above um, the previous swing. Like we did earlier on, I used the average true range. I just used a range of any of these. But otherwise, what people would normally do, they would use maybe the 71. You could place it at the 71 level. That would be where your stop would be. Or if you added the 88, you'll place it at the 88. You don't want to be placing it at the 100 or above. That would be having a too wide, too big a stop loss. So you could use the levels as well for your stop losses. Either use the range, the price range, average true range, or use the level, as in 71% or the 88, and you are fine. Let's go with 71 here. So here, did we get of course, we won this trade. You can see from here to there, that's an 80 pip stop loss. You can see we got more than 80 pips. And the trade, I don't think the trade is even yet over necessarily, but even if it is over, then we still have made our profit. Let's do this. So this trade delivered over 120 pips before it pulled back up. By now, I'm sure if you took the trade with me, you are already out of this trade. So you can see this is one trade that will surely give you more than one-to-one. I have a number of strategies that give you one-to-one, and this is one of them. Obviously, you guys know about Surefire, and there are others you do not know that you would perhaps need to get hold of if you want to have an advanced session with me. If you want to buy my advanced Forex course, then you can get other strategies that will give you more than one-to-one. Hey, this is my Christmas gift to you. Enjoy. It is a season of giving. And hey, If God sent his son into the world as a gift for us, who are we not to give gifts as well, especially at such a time as this dirty December? Enjoy this and be profitable. God bless.